Did you know Bloomberg just reported that 70% of retired people will use their retirement funds to help their children? Is that the best thing to do with your retirement funds? Today, we're going to talk to an expert to help you understand you have other choices instead of draining your retirement funds. Welcome. I'm Kenneth Manessi with KeyToVegasHome.com right here in Las Vegas, powered by EXP, and also the author of this second book, Inside Secrets to What I Wish My Agent Would Have Told Me About Real Estate and Reverse Mortgages. Today's expert guest is dthomas from CMG Home Loans, and we're going to talk about not draining your retirement funds, but using something you already have equity and turning it into liquidity to help you at retirement. Dennis, welcome to the show.
Thank you very much, Ken, for having me. This is truly a pleasure for me to come on and share my experience with reverse mortgages, which currently I've done approximately 4 of them. And if you don't mind me saying, one is my mother. Personal. One's my mother, and the other 3 is my mother's sisters.
You know, I find that most people in the loan business first find that they can help their family, and then when they see the value of that, then they see how they can help other people in the community. So, Dennis, give us a little background on who you are and CMG Home Loans, and then let's talk about how you've been able to help people using reverse mortgages.
Again, like I say, I've been in the mortgage industry for over 31 years. Started off in California, from Northern to Southern California, then ended up coming to Las Vegas. My background varies. I'm telling you, I'm a full service, you can say full service mortgage banker or mortgage company. I'm experienced in FHA, VA, conventional, all non-QM products, all subprime products. And I said to myself, then since I've done these reverse mortgages, why don't I just get certified and go out there and share my experiences? Because people are literally missing it. They are missing it. And how you're missing it, you said it at the beginning with the Bloomberg report.
Yeah. People don't realize that if you have a drain problem, call a plumber. Don't tack your retirement funds. There are options available. And for me, I mean, at the end of the day, helping people with real estate build out their portfolio and then looking at their portfolio and saying, okay, now that we have this retirement fund, what can our retirement look like that we can fund? And that's exactly why we want to talk about this. Now, you mentioned your mother. So do you mind sharing that story, Dennis?
Sure, I really do. Well, this was about 30 years ago. My mother basically pulled out, and I guess you guys, I want you to follow the numbers. My mother pulled out about 150,000, and we took 75,000 and fixed her house up to FHA, because this is an FHA product. We had to bring it up to FHA guidelines and specs, which we did. I took the other 75,000 and I put it in an interest-bearing checking account, whereas she could receive funds every single month. Now, there is something in the reverse mortgage system says that, yes, you can receive payments from reverse mortgage, but again, if something happens, the payment stopped. And I really didn't want my mother to get caught up. So also what we did, we went out and I also put it in living trust to protect the house, to protect the assets. Now, again, my mother stayed in our house. I want you to really follow this. My mother stayed in our house for 25 years. Now, this is when the market went down. The market was depressed. She was still in our house. No payments were made at all. Then after that, you kind of figure that if she was in there for 25 years and the payments being $900 a month, that comes to about 270,000 a year of no payments. Now, here's the beauty of it. When my mother got ill and sick, it said, I was able to sell her house. And when my mother sold her house, my mother walked away netting 250,000. Again, 150,000 at the beginning.
Yeah.
No payments for 25 years in a depressed market. All my mother was required to do, and this is very important, you must pay your taxes, you must pay your insurance, and you must owner occupy the property. And I stress that because people got into these reverse mortgages, stayed in there 5, 10 years. The bank came around, did the audit, and they end up foreclosing on them because they did not hold to the agreement of the contract.
Yeah.
Again, pay your taxes, pay your insurance, and you must owner occupy the property.
And people don't realize when you say, Dennis, owner occupied, what we're talking about is 6 months and 1 day out of a full calendar year. That must be your primary residence. It doesn't mean you can't have other homes or go travel or do anything else to visit the grandkids. That just needs to be your primary residence for 6 months and 1 day in a calendar year. So
you're absolutely correct.
Now, and I want to tap into something because you said something, Dennis, that people don't realize. And I'm trying to get people to wrap their minds around it. And you brought this up when you were telling your mom's story, and that is you put the home in a trust. Most people think when you got a reverse mortgage, the bank owns the home. And as soon as you retire or die or you can't afford it anymore, they come get it.
No,
that's not the case. You even said you sold the house. Explain why that is so important to people.
Why it's so important to me was to put it in a living trust is because as you get older, you want to kind of be in control. You can control right now what's going to happen once you're demised. So you can say, I want the money in the bank to go to wherever you want it to go. You can say that the silverware can go wherever you want to go. Like my mother, again, I'm gonna bring her up. And what she did exactly that. She had porcelain dolls. Mm-hmm. She made it sure in that living trust that porcelain dolls went to my grandkids. She had rocking chairs that went back 60, 70 years. She made sure that came to me. She had albums that went back so many years. Yep. So by putting it in the living trust, you can dictate what happens and you can feel comfortable with it. Again, there's a myth out there. You do own the house. It's yours. It's just like going out doing a refinance. Only thing of it is everything is done in reverse.
Yep. And you're exactly right. And we're so used to training everybody to go get a forward mortgage. And a forward mortgage is just you go get the loan from the mortgage company, they're on title, and you're paying them, the bank, to pay down that loan until you can take possession of it. The reverse is the opposite. You are on title, the bank is not on title, and the bank's paying you for the equity, turning it into liquidity. So just like Dennis's mom, you can fund your retirement. You don't need to drain your retirement fund.
No need. And if you can give me 1 minute, I got another one for you.
Excellent. Go ahead, Dennis.
My auntie, same situation. Only different of it is my auntie passed away. She was in the reverse mortgage. She passed away. And with her, all her siblings and the person who made her executor over her living trust passed away. So what I did, I contacted the bank. The bank came to me and they said, Dennis, feel comfortable. We don't want your house. We'll give you 6 months. They gave me 6 months to sell that house. Now watch this. The house didn't sell. So what did I do? I picked up the phone. I communicated with the bank. The bank said, no problem. Dennis, we don't want your house. They gave me another 6 months. 4 months later, that house sold.
Yeah.
The bank got their money because only thing the bank wants is what they put in. They got their money, and the difference went to the trust, and then whatever was specified in the trust. Here's the key: the trust. When whatever was specified in that trust, the funds had to be distributed accordingly.
Yeah.
So there's two examples right there. One when a person was alive and sold. One when a person has expired and sold.
Yeah. And people don't realize that, again, using a reverse mortgage, the bank, especially under FHA rules and under HUD, they don't want the house. They're not like loan sharks coming in to take the house away from the family. They want to work out a scenario so that it all works out. And as Dennis is saying, and you keep hearing him mention the will and the trust, and the simplest way to understand that is a will determines who's getting what, and a trust determines when they're getting it. So if you have a will and you put it into a trust, here's the great news. In Las Vegas, you don't have to worry about probate.
There
That
it
is
is.
not an issue.
Beautiful.
Did you have any problems with probate because you had a will and trust?
None whatsoever. Matter of fact, she didn't have a will because just what you're saying, because I always know that wills could be contested. So I went straight into the living trust.
There you go.
No, straight there because I wanted to protect her. And when I sat down with my auntie, I said, Auntie, you know, you're not going to be here for the rest of your life. She said, yes, grandson. She said, yes, son. I said, so I want you to write down everything you want, who you want it to go to.
Yeah.
Look at the house. We went in, we did a survey of the house, and everything I pointed out, she put a name on it.
Yeah.
And when she, like I said, at my auntie's demise, the money that came out of the equity of the house, it went right straight to the living trust, and everybody got what they were supposed to receive according to the living trust.
Yeah.
But again, if you don't mind me saying, and I got to emphasize this because reverse mortgages have a bad rap out there, and the fact of it is that it's not true. Yeah. Again, you must pay your taxes. Yeah. You must pay your insurance. You must pay your HOA, and you must own or occupy that property for at least 6 months, for a week, 6 months, come back a week and go on vacation. But again, just like Ken mentioned.
Yeah. Yeah. And people don't realize with a reverse mortgage, you can own multiple other properties. Yes. Just your primary residence is what the bank is paying you as you live in it for 6 months in a day. They pay you so that your equity turns into liquidity so you can fund your lifestyle, your retirement, or even your grandkids. Now, people don't realize this, Dennis, but speak unto the fact that in a reverse mortgage, I know you kept on saying paying your house taxes, but your mom or aunt never paid taxes on the money that they received from the reverse mortgage, did they?
No, because again, it's just like you mentioned, it's not interest, it's equity. Yeah. So you don't pay interest on equity. The taxes that I mentioned are the property taxes that's due every year. The insurance that I mentioned is the insurance to insure property. If anything goes wrong, insures the investment that you have to pay every year.
Yeah. Yeah. And people don't realize that is where this literally changes your retirement. I mean, Bloomberg, drain your retirement. 70% of the people are out there saying drain your retirement for their kids. Here's a way to use your equity. You turn it into liquidity, pay no taxes, and gift that to your kids without the government reaching into your pocket and taking their share out, which they don't deserve because it's your equity. You agree?
You're absolutely correct, Ken. You are absolutely correct.
Oh my gosh. I mean, Dennis, I'm trying to get people to wrap their minds around reverse mortgage and the misconceptions. It's almost like we're having to fight this battle downhill and get uphill so that people can go, well, wait a minute, there is an opportunity for my future, for my retirement, and I've been sitting on it all this time with my equity. Now, we did say retirement age. Give us some of the specs for the key requirements for somebody looking at a reverse mortgage.
the basic requirements is 62 and above, even though they have another, believe it or not, just by, getting my certifications over, even though I've been doing this for over 25, 30 years. So I just finally got certified about 3 weeks ago. You can get a reverse mortgage at an age of 55.
Yep.
There is another kind of reverse mortgage out there that I just found out about it, but it's tied to a 10-year fixed rate loan. And then after that, it turns into a reverse. But that's something I don't think we want to go into right now. But there are about 3 of them out there. But the major requirements are, again, age, I would say 62 and above. That's the major requirement. And again, I hate to beat a dead horse, but I'm hearing too many things that I lost or my friend lost their property. They came and took my friend's property. And I said, it would have to have been one of the 3.
Yeah.
And then what I do is when I sit down with a client, I have a form called the 10 myths of a reverse mortgage. And I let them read them, and they sit there and they read each myth of the reverse mortgage. And I look at them and I'm asking them questions. Are you comfortable with this? Do you understand?
Yeah. Yeah. And that's at the end of the day, listen, if you are in a place that you were considering draining your retirement, I want you to at least sit down with Dennis and consider this option. Now, obviously, there are some requirements, and I'm going to list some of those key requirements down below this video. But here's what you need to know. Someone like a professional like Dennis is going to sit you down and help you through the myths and the misconceptions so that you can get the facts to make the right choice for you. This is an opportunity that you don't want to miss. Dennis, what's the best way for people to get a hold of you?
The best way to get a hold of me, you can give me a call at 702-493-5658. That's 702-493-5658. My email address is D as in David, Thomas at cmgfi.com. dthomas at cmgfi.com.
And I'm going to provide all of Dennis's links down below this video so that you can reach out to Dennis. And I want to share with you, if you would like to get a free copy of this book, you can go to keytovegas.com under the homeowner tab. You can actually download it digitally right now, or if you put your address in there, I'll mail you a hard copy. I want to share, there's 4 stories in here that I want you to hear, just like Dennis shared today about 2 stories of his family, how they've used a reverse mortgage not to drain their retirement fund, but to help use those funds to enjoy their retirement. Dennis, thank you for being on Inside Secrets too. I'll make sure that people reach out and connect with you today. And more importantly, what I want people to know is just this. Whatever you have heard about reverse mortgages, talk to a professional, just like Dennis, to make sure it's not a myth or a misconception, so that you can use your equity and turn it into liquidity and enjoy your retirement. Thank you, Dennis. We'll see you next time. And thank you for watching Inside Secrets too. And please go to keytovegashome.com under the homeowner tab. Get your free book today, and we'll help you with using a reverse mortgage at retirement. Thanks. We'll see you soon.
Thank you.